Hello and welcome along to the industry analysis for the management case study of February 2020. Here we're going to be looking at the real-world music industry and specifically the music recording industry, some of the key facts, figures and trends from recent years, and indeed some of the upcoming or anticipated changes within the industry as well. Before we get into the industry analysis itself, let me just address a quick question which is sometimes raised by CIMA students when it comes to the industry analysis. They often ask if it's really necessary to do an industry analysis separate from what you're presented with in the preceding document. Of course, you are presented with some relevant industry information, but I do think it is a worthwhile exercise for a number of reasons. But first, let me just say right off the bat, you're not expected to be an industry expert by any stretch of the imagination. However, I do think there are two key potential benefits on exam day to understanding the wider business environment and the industrial context, and those are as follows. Firstly, it helps you to anticipate some of the potential issues that might arise in the unseen scenario and therefore avoid any nasty surprises or confusion on exam day. So of course, the unseen scenarios are going to be as realistic as possible, and for that reason they're likely to be based on some real world industry trends. For that reason, it's a good idea for you to be well versed and very familiar with those industry trends so that you're not taken by surprise or caught off guard. It might even help you to anticipate some of the specific issues and problems that are presented to you on exam day. Secondly, it makes it easier for you to illustrate and apply your abstract theoretical knowledge, what you've covered in your objective tests. The whole point of the case study exam is to get you to apply that knowledge to a realistic real-world scenario. And so for that reason, understanding the real-world industry and context is likely to give you the tools and the concepts and the ideas to illustrate and to apply your knowledge better on exam day. So let's just have a quick overview of what we're going to be covering in this industry analysis. We're going to start with the music market in 2019. We're looking specifically here at the way in which music is consumed in the contemporary context. From there, then, we're going to move into the industry itself. We're looking primarily here in section 2 at key facts and figures from the music industry in recent years. In section 3, then, we're going to take a closer look at record label companies specifically. And finally, then, you have the sources at the end. That's there for you if you want to do a deeper dive on any of the topics raised within the industry analysis in your own time. Okay, so let's start with the music market in 2019. We're starting with the basics here. What is music, just in case any of you don't know? By simple definition, music is the blending of sounds, instrumental and or voice, in an orderly sequence to create a composition that is pleasing or interesting to hear. For most of history, all music was performed live, of course, often in association with religious ceremonies and celebrations. Technological advances, however, have allowed recorded music to be shared widely and made it possible for musicians to experience the work of other musicians throughout the world and to reach a broader audience of listeners with their music. So there's the very basic context and background for you. Why do people love music? This is perhaps a more profound question than might seem at first glance. You might think, well, it's obvious why people love music, but there are certain interesting psychological components to this. They have done studies and research on the psychological effects of music. Using magnetic resonance imaging, it was demonstrated that people listening to their preferred music had activated brain regions called the limbic and paralimbic areas, which are connected to euphoric reward responses. So very powerful physiological effects here associated with a person's preferred music. You can see here on the left, 54%, more than half say they love or are fanatical about music. 63% loving music is the highest amongst 16 to 24 year olds. That's a trend we're going to see over and over again within the music market. And 2.5%, only a small number, say music is not important to them. So the vast majority of the population have a very strong or a fairly strong interest in music. So bear in mind then that this is something that is very, very powerful psychologically and physiologically. And for that reason, of course, marketing, advertising, promotion will want to tap into those euphoric feelings that people associate with music. A global picture of music lovers then. So this is the category that we saw there in the previous slide of 54% say they are music lovers. They listen to 50% more music each week than other categories, listen to 75% more music than other categories on demand, for example, through streaming services. They listen to twice as much music through streaming services as other categories and are almost twice as likely to use audio streaming for music. Now, bear in mind that the overlap between those who consider themselves music lovers and those in the category of 16 to 24-year-olds, there is significant overlap there, and that may explain why 75% more listen to music on demand. Music lovers as well are twice as likely as any other group to pay for a streaming subscription, listen to twice as much music on CD or vinyl. So vinyl, again, another interesting resurgence. This was pointed up in the pre-scene document that vinyl is making something of a comeback in recent years with especially younger music enthusiasts. Music lovers are more than twice as likely to use TikTok and Snapchat on a daily basis. Again, that's indicative of the overlap between music lovers, or those who consider themselves music lovers, and people in the 16 to 24-year-old demographic. And they listen to music at gigs or concerts almost 3 times as much. So again, there's that overlap with the younger demographic there, which might explain some of these correlations. Across the world, highly engaged music fans are exploring new ways to listen to their favourite artists all the time. So this group is also more responsive to new ways of consuming music. So how do people listen to music? 40 years after the release of the first Walkman, consumers are used to listening to music throughout the day, whether they're at home, at work, or somewhere in between. That's according to the latest IFPI Music Consumer Insight report, for which 19,000 people from 18 countries have been surveyed. The following chart on the right here shows where and when people typically listen to music. Unsurprisingly, perhaps, in the car, still way out in front at 66%. People listening to music in their commutes, for example, or on their way to do some errands. That's where the most people listen to music, and that probably reflects the fact that the opportunities within the car, you can listen via radio, you can listen to your device, you can listen to an iPad, you can hook up your device to your radio in most modern cars. So you have a number of different media options in that context, and in all likelihood you're not really going to be doing anything else. You can't really do anything else interactive in a car, and so for that reason music is very conducive to that situation or that scenario, because of course music is by and large a passive exercise, and so for that reason you have a huge amount still listening in the car. Relaxing at home, 63% unsurprisingly in second place. Commuting to work or education, so that would include other modes of transport such as train or bus. Cooking and cleaning, 54% as well. Working or studying, down to 40%, because of course many people find that distracting. Exercising or at the gym at 36%. And of course that reflects the fact that not everyone goes to the gym, and so that's a lower percentage. At concerts or festivals, 36%, and going to sleep at 19%. So the top 10 favourite genres globally of music. Of course, genres are going to be very important from a marketing point of view for a record label. They want to know what demographics, for example, correspond to the different genres and what kinds of behaviours are manifested by those groups and those segments that listen to particular genres. So it is important to know what's the most popular as well. Number 1, unsurprisingly perhaps, is pop or popular music. Number 2 then is rock. Number 3, oldies or classics. This is mentioned in the pre-scene document as well, that classics is a significant segment. Hip hop and rap comes in at number 4, dance electronic at number 5, and then at 6 you have indie alternative. 7 is K-pop, which is an interesting little subculture within the music industry. Korean pop, South Korean pop music has had something of a resurgence, especially in the last 5 to 10 years. Number 8 then is metal or heavy metal. Number 9, R&B. And number 10 is classical music. Just be careful not to confuse classics with classical. Classics can be interchanged with the term oldies, but classical music is certainly something that should be distinguished from classics. Classics tends to refer to music from, say, the 50s, 60s, especially rock music and pop music from that era. Let's have a look now at the history of portable music. We mentioned the Walkman already. That was really a revolutionary moment in the music market. When Sony introduced the first Walkman in 1979, the portable, if clunky, cassette player was a total game changer. It freed music lovers around the world from the shackles of only being able to listen to music to their favourite tunes at home or while driving a car, on the radio that is, and brought music everywhere. So this was revolutionary. This was like one of those moments, for example, like when the iPhone was released back in 2007. Thanks to smartphones, streaming services, and wireless headphones, music is now more portable than ever. The following chart shows several milestones on the journey that started with the first Walkman in 1979 and seems to be nearly completed in 2019. The total liberation of music. So as you can see here on the right, we have a nice little history chart. You can see the Walkman first in 1979. The Discman then came in 1984, and that really pushed the popularity of CDs or compact discs as the preferred medium of listening to music. And that was right up until the late 1990s, early 2000s. Then we had the advent of so-called MP3s, digital format music, and we started to see people playing their favorite songs, for example, on iPods, these devices specially designed for MP3 playing of music. And then of course it transitioned to the smartphone. As I said, that was another one of those kind of revolutionary moments when everything seemed to be included in one device. You'd music, internet, phone, lots of other functionalities as well. And since then, really, that's been the situation, that's been the case. We have had smartphone as the primary mode or means of listening to music on the go. And of course, we've had things like wireless earbuds in recent years, not particularly revolutionary, but just enhancing or augmenting that experience of mobile listening. Let's look now at the global device share of music listening time. We've got radios, still the most popular device. That might surprise some of you, accounting for 29% of the time respondents spend listening to music. However, you should bear in mind that that is going down steadily as the years go by. Smartphones are just behind at 27%, and it is expected that indeed in the coming years, the smartphone and indeed other devices are likely to overtake radio. Of course, smartphones are bigger for younger listeners. Unsurprisingly, perhaps, they account for 44% of the time 16 to 24-year-olds spend listening to music, according to the following study. So younger users are rapidly adopting smartphones for music listening. 27% global share of music listening on a smartphone, 44% of 16 to 24-year-olds. So that is to say 27% of total listening throughout the world for all age groups is 27%. But we've got 44% of 16 to 24-year-olds listening to their music on a smartphone. 68% of 16 to 24-year-olds chose a smartphone when asked if you only had one device to listen on. So we're looking here on the right then at the number that use smart speakers, for example, for music in the last 3 months. 20% globally. The United States, then we've 34%, United Kingdom 30%, Germany 22%, Sweden 19%. So as is often the case, the US tends to be the trendsetter when it comes to these new forms of consumption, and they are 34% for smart speakers, which obviously are hooked up to tablets and other mobile devices, and that's becoming a more and more popular way, indeed the standard way of listening to music in the home especially. So as before, in the past, we used to have big hi-fi systems, huge big music playing systems in the home, and that's now being replaced by smartphones hooked up to small but powerful smart speakers which are compatible with those devices, and that seems to be now increasingly the norm. 34% of the music listening population in the United States already using smart speakers. Streaming music is, of course, popular globally, not just in places like the United States and the United Kingdom. 89% listen to music through on-demand streaming, at least at some point in their day-to-day listening of music. 4 hours is the time spent listening to music through audio streaming each week. On average, 64% listen to music through audio streaming services in the last month. So again, the majority of people have at least once in the last month listened to an audio streaming service. That's the majority, and it's a healthy majority at that. 52% of 16 to 24-year-olds used paid streaming in the last month, the highest of all age brackets. Now, that might be a little bit surprising considering people in that age group tend to have lower purchasing power, lower disposable income, and yet still they're paying for those monthly streaming services. But I think that's an indication of the perceived value of those subscriptions, that it's quite a low rate per month and people are willing to pay that amount of money for a huge selection of music without advertising interrupting. And that's especially important, it seems, to those music lovers who tend primarily to be in those younger demographics. 63% of 16 to 24-year-olds used audio streaming services in the last day, and 3.5 hours is the time spent listening to music via video streaming each week. So video streaming is another interesting kind of sub-segment within the music market. Places like YouTube, for example, are very popular for listening to music. Indeed, amongst the younger generations, YouTube tends to be more popular than things like radio. Highest rate of growth for use of streaming services, interestingly, is in the 35 to 64 age group. So whereas in absolute terms, we're looking at the 16 to 24-year-olds who are using streaming services most frequently, in fact, the growth rates are higher in the older segments. 54% of 35 to 64-year-olds used a music streaming service in the last month, up 8% from 2018. So that's where the growth is happening. 89% listen to music through on-demand streaming. On average, people are spending around 18 hours a week listening to music, up from 17.8 hours a year ago. It's clear that streaming is driving this. 89% of respondents now use some kind of on-demand streaming service, while 64% listen to music through audio streaming services in the last month. The latter stat is up from 57% just 1 year ago, 7% difference there. So that's quite significant. Just so that you avoid confusion here, when it says 89% of respondents now use some kind of on-demand streaming service, and we're looking over on the left here, and we're seeing that it's 64% listen to music through audio streaming services in the last month. Simply, that's an indication that 89% are listening at some point in the last year to an on-demand streaming service. And indeed, don't be fooled by that 89% figure into thinking that all of those people are paying for a streaming service. A lot of these on-demand streaming services have a free version where you can listen to music for free, and yet there's going to be advertising, for example, in there to ensure that those kinds of services like Spotify are still receiving revenues from people listening for free, indirectly at least. But of course, you can always pay the subscription then to get rid of the advertising, and that's their business model. So 89% are using some kind of streaming service, but not necessarily 89% of music listeners are paying a subscription. So that's a separate category. In 2019, engagement with on-demand streaming is high across both paid and free services and all age groups. For audio streaming, access to large catalogues of music and convenience are cited as the top reasons for using a streaming service. Here again, we're looking at some of the age differences in the demographics. Global, we're looking at 64%, 16 to 24-year-olds at 83%, 75% for 25 to 34-year-olds, 64% for 35 to 44-year-olds, 53% for 45 to 54-year-olds, and then 55 to 64-year-olds at 44%. But notice the growth rates there in brackets are larger for the older age group. So it may well be that the younger generations are a little bit ahead of the curve when it comes to taking advantage of and utilizing new technologies, but we're likely to see that the older age groups are going to start catching up then in the coming years as they kind of catch on to or transition away from their more habitual means of listening to music and utilizing the more economical and convenient means such as on-demand streaming. The main reasons for enjoying audio streaming, we saw some of them just now. 62% recite the fact that you have instant access to millions of songs. 61% listening to what I want when I want, so the on-demand element. And then 47% it's the most convenient way to listen to music. So you've got access, you've got on-demand, and you've got convenience as the three primary reasons why people prefer streaming services. Music purchasing habits as well also vary across age groups. You can see an interesting little graph here just below. We're looking at paid to download music, buy any music on CD or DVD, and buy any music on vinyl. So we'll start with vinyl there. You can see that actually it's amongst the younger age groups that we have the most purchasing going on. Up to around the 25 to 34-year-old bracket is where it peaks, and then it trails off for the older generation. So it might be a little bit counterintuitive at first glance, but of course we've had this resurgence in popularity of physical media, in particular in the form of vinyls amongst the younger generations. You could say sometimes they're called the hipster segments or the hipster generation. They are more interested in these kind of vintage and vinyl products. Then we have buying any music on CD or DVD, and again, perhaps unsurprisingly, the younger generations tend to do this less frequently, and then as you get older, it goes up and peaks in and around the 35 to 44 and 45 to 54 generations, or segments I should say, and then tapers off once you get to around the 55 to 64. And then finally you have paid to download music, and you have peaking again amongst the younger generations and trailing off significantly as you get into the older age groups. So both vinyl and paid to download tend to be peaking around the 25 to 34 bracket and then trailing off significantly, whereas it's the older generations that are still buying the other physical music media like CDs or DVDs. Let's look at a country breakdown here. You can see at the bottom of this graph you have the abbreviations for some of the major music markets. And interestingly, we have Korea at 44%. This is any music purchased in the last month. And I think that's a reflection of the booming K-pop industry in South Korea. 44% of the population there have purchased music in the last month. Then you have in the United States 34%, and that's a reflection of the popularity of the streaming services in the United States market, and 30% in the UK, 27% then in Australia, and globally you're looking at an average of 26% of the population has purchased any form of music in the last month. All right, let's look now at the music industry in more detail, some of the key facts and figures. The music industry, first of all, what exactly is it? Well, it consists of the companies and individuals that earn money by creating new songs and pieces and selling live concerts and shows, audio and video recordings, compositions and sheet music, and the organizations and associations that aid and represent music creators. So it really is a very broad and varied category, the music industry category. It's not just record labels that we're talking about here. We're talking about a whole host of different groups, organizations, companies, associations, and so on that are involved in some way, either directly or indirectly, with the production and sale of music. Among the many individuals and organizations that operate in the industry are the following. We have songwriters and composers who create new songs and musical pieces, the singers, musicians, conductors, and band leaders who perform the actual music. Then we have the companies and professionals who create and sell recorded music and or sheet music. For example, you've music publishers, music producers, recording studios, engineers, record labels, retail and online music stores, and performance rights organizations. That latter one is becoming increasingly important in the age of digital music. And those that help organize and present live music performances, such as sound engineers, booking agents, promoters, music venues, and road crew. So remember, there was this distinction in the pre-scene document that was presented to you, the distinction between the live music industry and the recorded music industry. And we saw recently that the live music industry has indeed overtaken the recorded music industry, and that is the case in the real world. Global recorded music market grew by 9.7% in 2018, the fourth consecutive year of growth. So it is in a fairly healthy growth trajectory at the moment. Figures released today in IFPI's Global Music Report 2019 show total revenues for 2018 were 19.1 billion US dollars. So you can see here on the right some interesting points. You've got the global revenue growth of 9.7%. You've got 32.9% growth in paid streaming revenue. So that's really driving a lot of this growth. 34% in overall streaming revenue. So that's both the free and paid services. 46.9% streaming share of global revenues. Minus 21.2% download revenue decline. So downloads are definitely on a negative trajectory, and of course the physical revenue continues its decline, although less steep, it has to be said, than the decline of the download revenue. So that's an interesting point to bear in mind as well. Streaming really is squeezing out the download market as well, and indeed it seems at a faster rate than it is the physical revenue decline. So physical sales still again quite relatively popular amongst the older age groups, and indeed amongst those who are interested in things like vinyl as well. So really the one that's suffering the most, the segment suffering the most, is the download segment, because that's being squeezed from both sides, both in terms of the physical sales that continue amongst the older generations and from the streaming service, which is the vastly preferred mode of listening to music now amongst the younger generations. Streaming revenue grew by 34% and accounted for almost half, 47% of global revenue, driven by a 32.9% increase in paid subscription streaming. There were 255 million users of paid streaming services at the end of 2018, accounting for 37% of total recorded music revenue. Growth in streaming more than offset, a decline of 10.1% in physical revenue and a 21.2% decline in download revenue. So the streaming is accounting for the continued growth. It's offsetting those declines that we've seen in these other segments as well. But you could say indeed that it is responsible for the declines in those segments. We see an interesting chart here, and this one is similar to the chart that you're presented with in the preceding document, looking at a very similar growth pattern over the last 18 or 19 years from 2001. You can see the vast decline of the physical media here in this graph, all the way down to, we're looking at 4.7% in 2018 of the total market. And we've seen, of course, here in blue, the streaming revenues are jumping up very, very rapidly. So again, most of the growth being driven there by the streaming, and indeed we're seeing the live music as well, complementing that live music growth, live music industry growth. So overall, it has to be said, the music industry, broadly speaking, is in a relatively healthy position if you take into account both the streaming and the live music industry as well. Let's look now at the 2018 figures by format. We're looking at digital revenue first. Overall digital revenues grew by 21.1% to $11.2 billion in 2018, crossing the $10 billion mark for the first time ever, and now accounting for 58.9% of total recorded music revenues. Digital now makes up more than 50% of revenue in 38 markets. So digital covers both streaming and downloads as well. Physical revenue then, this is vinyls, CDs, DVDs. Physical format revenue saw continued decline in 2018, dropping by 10.1% and now accounting for around a quarter of the total market, 24.7%. As in the previous year, the majority of markets saw a decrease in physical format revenues, but a small number of markets bucked the trend, posting growth, and that may well be attributable to the resurgence of interest in vinyls. Performance rights revenue then, revenues from performance rights, that is the use of recorded music, for example, by broadcasters in public venues, climbed in 2018, seeing an increase of 9.8%, totaling $2.7 billion. Performance rights revenue represents 14% of total recorded music industry revenue. So still less than physical revenue, but the growth rates there are very encouraging indeed. And then we have synchronization revenue. This again was mentioned in the preceding document. Synchronization, which is the revenue from the use of music in advertising, film, games and TV, posted growth of 5.2%, a more modest rate than the previous year, but maintaining a 2.3% share of the total music market.